2025 was shaping up to be a defining year for crypto. It started with major headlines, renewed optimism, and a sense that the industry was stabilizing. Prices climbed, sentiment improved, and milestones followed.
Cryptocurrency crossed above the $125,000 level for the first time ever.
October started strong, but quickly 180'd. Red candles replaced green ones, and what was a strong year ended up feeling far more uncertain. I mean, look at Bitcoin. We went through an entire year of ups and downs just for prices to end the year a little below where we started. So, is this another normal crypto downturn, or is something deeper holding the market back? Well, let's take a closer look. Crypto moved fast into 2025. Prices climbed early, and it wasn't all just hype. ETF inflows were steady, regulation became clearer, and more apps started showing early signs of real revenue. And that shift also opened the door for bigger players. After years of uncertainty, institutions finally had clearer rules to work with.
And unleashing America's digital asset potential with historic, transformative legislation.
It meant capital that had been waiting on the sidelines finally started to pour in, and the market took notice. Bitcoin hit a new all-time high of just over $126,000 on October 6th, and total crypto market cap briefly crossed $4 trillion. For a moment, it felt like the market was finally entering the expected euphoric stage everyone was waiting for. And then the tone changed. Whether it's just narrative following prices, what we know is that the October sell-off was brutal. Trump's announcement of China tariffs triggered a deleveraging event that wiped out $19 billion of positions, the largest in crypto history. Global uncertainty rose, risk appetite faded, gold continued skyrocketing, and crypto sold off much more than traditional risk assets like stocks, which were more resilient. By the end of 2025, Bitcoin was down about 30% from its peak, and the total market cap slid back toward $3 trillion. So if last year started so strong, what went wrong? Well, the first thing to understand is this: good news alone isn't enough. Many of the rally's drivers, like ETFs, clear regulation, and institutional participation, weren't surprises. By the time that they showed up, it was already priced in. And that's because markets don't move just on headlines. And then after the fact, markets then also adjust when reality turns out better or worse than what people were already expecting. And this matters even more in crypto. With many cryptocurrencies like altcoins, prices often assume a future where adoption is widespread and revenue growth is almost guaranteed. But in reality, usage today is still relatively small compared to other technology sectors. So when prices already reflect a best case outcome, progress by itself doesn't push them higher. And when uncertainty creeps in, even slightly, prices can fall fast because that future suddenly looks less certain. But expectations weren't the only thing working against crypto. At the same time, attention and capital were being pulled somewhere else: AI. As AI took center stage, crypto wasn't the automatic growth play anymore. Capital that might have gone into crypto started flowing elsewhere. And there's one more piece that ties this together. Companies don't adopt technology just because it sounds good. They adopt it when it makes financial sense. So while adoption headlines kept coming, real usage and revenue didn't always follow. And as last year came to a close, that gap became impossible to miss. So the downturn wasn't about one thing going wrong, but a stack of pressures hitting at the same time. From the historic liquidation event in October, which shook confidence and turned sentiment around, to rising skepticism around the sustainability of AI's growth, to rising geopolitical tensions, which pushed investors away from volatile assets. Crypto wasn't alone, but its volatility made the sell-off more intense. Then another source of support started to fade. Some companies that had built large Bitcoin positions saw their share prices fall. Raising new capital became harder, which slowed their ability to keep buying Bitcoin, and that further took demand out of the market. But underneath all of that is a deeper issue. In traditional markets, companies are valued on predictable revenue, improving margins, and steady cash flow. Prices rise when performance can be measured and repeated. Crypto still struggles with this. Much of today's on-chain activity still revolves around trading and speculation.
I think Bitcoin can easily get to 200,000.
Fee revenue rises in bull markets and falls quickly during downturns. So without strong, structural, consistent demand, growth depends on narratives. So prices rise when new buyers show up, but once the story is priced in, momentum fades. And as crypto competes for capital, comparisons to AI are becoming unavoidable. Despite growing skepticism, the AI sector is already showing enterprise demand and real revenue growth, while crypto is still working toward that level of economic clarity. In the end, the market values real economic activity to back up today's prices. Right now, most of crypto's value still rests on expectations about the future instead of consistent usage or revenue. Now, don't get me wrong, progress is being made. Tokenization keeps gaining attention, and major institutions are testing blockchain-based settlement and custody. We're still in the early stages of this, so analysts warn that effects on earnings this year might be limited. At the same time, regulation is moving forward, just not evenly. Some regions are making real progress, while others are slow or fragmented. Still, frameworks are slowly taking shape. Even so, crypto has always followed a familiar pattern. Prices rise, prices fall, sentiment cools, and then the market slowly rebuilds. Now, whether those efforts show results in 2026 or take longer is of course still an open question, but they're likely laying the groundwork for what comes next. Some believe the next rebound could come faster than before because the ecosystem is more mature and infrastructure is stronger. And on top of that, we didn't see the same type of retail participation and market euphoria as the previous cycles. So, do you think 2026 will be a crypto winter, or are we headed for good news? Well, let us know in the comments below. And if this video helped you out, don't forget to like and subscribe to stay updated on all things crypto.